Hello, welcome to another video from 10x Investor Education. So today in this video, I would like to talk about a company known as Navient Corporation. So what does Navient Corporation, the stock symbol is NAVI, does? So Navient Corporation provides asset management and business processing services to education, healthcare, government clients at federal, state, and local levels. So the most important thing, if Navient means it's just a student loan company for governments, that is not true. I will show you why. So first of all, it's a government education loan processing company, that is for sure where their most of their revenue comes from. But they are diversifying it, and also the company holds the portfolio of education loans insured or federally guaranteed, so they are much more safer under FFELP program. So it also operates through four segments: federal loans, private education loans, business services, and others. So let's get into details. So this basically deals with the Department of Education. So let's get into the details of the company and where it trades. Okay. So as you can see, guys, here it's trading between $6 and $14 within 52 years. So when the pandemic happened, it really fell to really bad to $6, like a lot of other financial companies. Almost $6-7 is where I started buying. I still keep buying on dips recently. I also sell covered calls. So on a combination of with 4.5% interest rate, sorry, not interest rate, dividend yield, and also decent covered calls return, and also the stock growth rate, as you can see here, it's almost within last 3 months, almost $10 to $14, which is 40% return. So I make around 50 to 60% return in last 3 months. So let's look into why I like the stock. First of all, this makes ton of money. A deep value stock, P by E of 6.5, earnings per share of $2.16. And as you can see here, it's still a small cap company, $2.6 billion, and this is held by 98% institutions. So you might be thinking why I am investing in this company. So this is part of my deep dividend portfolio where I pick a couple of stocks I think that will grow, increase the dividend, and also grow revenues decently and all value based, so that I can expect my decent dividends every quarter and every year, and also I can make money on covered calls. So that is the reason I invest in companies like this. As you can see here, so if you look at here, this was upgraded recently from target of $12 to $19, and you can from here you can look at it. A lot of analysts are covering the stock. A tip rank rate of 10, and if you look at here, a lot of strong buy, you can see a lot of green everywhere, and also the momentum is decent. And if you look at analyst ratings, the strong buy, it's for buy rating of 4, and then anywhere between $16 to $19. So that is how the stock, and as you can see here, the top rank deep value stocks. Okay, this is how about the company. So let's get into, so if you come back to revenue, what there, this is the recent quarter from January ending. So Navient quarter 4 earnings per share is 97 cents, which is beating 83 cents of estimate. So this is also really good news for this company. So if you look at here, what is Navient? This is their website. You can see different products, what they offer. So if you look at here, on top of the federally secured student loans processing that they do, they also have multiple products. So as you can see here, I'll show one of these products. So they are diversified into multiple products. One of them is, for example, portfolio management. Okay, so they have local government, federal, and state clients for which they do multiple things. For example, our services include collection of vendor management, portfolio administration, and also so over a period of time they actually bought several companies and part of Navient. So a full service transportation management company and a leading provider of parking and tolling management solution. So one of their company actually manages parking and toll management company. So, and also municipal services they manage, and also known as credit recovery. There's also business, always evergreen business, credit recovery business. And also, if you look at it, revenue cycle management, known as RCM solution, to lot of health systems and physician practices nationwide. So what they do is they show the efficiency and cash flow, maintain positive community relations through our accounts receivable processes. So basically, business process consulting is what they do with different products. So if you just look at this particular product, if you look at here payment processing, so they do a lot of payment processing. They support Master, Visa, Apple Pay, Google Pay for a lot of these clients, including county, city, universities, court, utilities, toll companies, so healthcare and software online. So they have decent revenue for a lot of these other products apart from student loan processing. So I would like to summarize based on just my one article where it shows both positive and negatives on this company. So this is a recent article a week back. The value stock is up 41% in 2021. Is it a buy? So if you look at here, so okay, so Navient got caught in the middle of storm, which they are talking about 2021. So it's a deep price to earnings of 6.5, which is deep value. Stock, even though stock up, even after it went up by 41%, it is still 6.5 because they are still growing revenues. So Navient is a good value stock in your portfolio. So this is a good part. So the bad part they are talking about is two things. So Navient bad had forbearance rates of 28.5 on federal loan borrowers and 14.7 on private loan borrowers. So as you guys know, with the pandemic went on, last year was really bad for this company with such a high forbearance rates. So even though this is basically government insured loans, if the loans are not are government, basically what's happening is their overall portfolio drops when loan is forbade, and then their overall portfolio of loan interest rates on which they get loans went down by from $90 billion to $84 billion. So that's what reduces the overall interest rate that they make and income they make. So, and also the combined with fewer student loans enrolling in the college. So 2020, 2021 was still bad for a lot of academic institutions. So because of all the issues, the enrollment rate also went down. That is the reason why. So this is still a bad. So combination of like a lot of other companies, this also company has a lot of bad things in 2020, 2021. So more loans in forbearance and drastic drop in interest rate is what the reason why the company has actually negative earnings last year. The company isn't just a student loan lender. This is the most important thing I would like to talk about. It also provides business services to 500 governmental and healthcare clients, which includes like expense management, risk management, business process support, and consulting. Last year, Navient put its team to work helping state governments process unemployment benefits and providing contracting tracing services. So this is where generally good source of income, especially on even a bad economic cycle. So the result of this new income sources, which is basically their revenue grew by 18% during the year to $304 million. So apart from student loan processing, if you look at these, this is a lot of revenue, which is 20% of their revenue. So they are diversifying not just from student loan, but also other over period of time they bought the companies. Those companies actually generating revenues through processing of business and other loans for these government agencies. Okay, so the most important thing here to understand is looking forward. There are signs things are turning around for this lender. So that's the reason why the stock has been going up also. The forbearance rates on loans dropped to 13.8% on federal loans and 3.5%. So the rate forbearance is dropping drastically. And also delinquency rates also dropping. And also on private loans and both government loans. So the company saw its charge-off rate fall to 0.88%. So, and if you look at here, these things should result in better income for 2021. So the company also expects its core earnings per share to range from $3 to $3.25, which is decrease. But however, this year 2021, with private loan origins expected to be, so basically they are doing a lot of, even student loans are dropping, they are doing other private loan originations, which is up by will be up by $5.5 billion, a nearly 20% increase compared to last year. Okay, so the other thing is it's a deep value stock territory 6.5, okay, and also dividend 4.7%. So the most important thing I would like is in a dividend paying deep value companies share purchases and dividends. So that is how they are returning the shareholders. In 2020, the company spent $523 million on dividends and share purchases, and it plans to spend another $400 million in 2021. So imagine this is a lot of money giving it back to shareholders. This coupled with improving economic conditions and increasing loan originations should serve as a tailwind for the company, making it a Navient a solid value stock worth consideration for your portfolio. Okay, so I am not your financial advisor, but at the same time, this is what my opinion is. So do not take as guidance and buy the stock. The reason why I kept on buying is because similar reason exactly mentioned here. So they are keeping their price to earnings rate low and growing their revenue with much more growth in 2021 and diversification and also share repurchases and also dividend is what the main reasons for me to buy the stock. So this is not a hyper growth play. This is not a growth play purely for my dividend stock, value stock. This is where, because as you can see here, this is 4.5 dividend, and also you can actually sell covered calls on these stocks and make 10 to 15% extra money. And also as the stock price appreciates, you will get in all three directions make money. So that is the reason, that's what I have been buying this particular stock for my dividend portfolio. So hopefully if you like this kind of stock, please click the like button, because this is where I would like to present not just hyper growth 10x stocks, but also deep value stocks, so that you can get a chance to diversify your portfolio and adjust the portfolio, as I believe the financials will still do strong in 2021. See you in my next video. Thank you. Have a nice day.